The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Carah Hart with the Red River Farm Network. Martinson Ag Risk Management Market Analyst and President Randy Martinson joins us today for a look at the agricultural commodity markets. Randy, thanks for being with us. The shorter trading week turned out to be volatile, essentially a wash out in the markets, and many commodities closed the day trade Friday mixed to lower. Why the lower week?
I think it was a combination of things. I think we saw some massive fund liquidation taking place this week. Seasonally, we do see a little bit of a pullback in this time frame as we transition from the planting season to the growing season. Right now, for the most part, the warm weather has been beneficial. We saw that, in the western part of the Corn Belt and Northern Plains, conditions improved because of the heat. Corn Belt went backwards, and it's likely it's going to go backwards again this next week. But the heat did help a little bit, and there was forecast for rain, and I think all that kind of came in to put a little pressure on the market to make the funds kind of take their profits, get out of some positions, and go and kind of wait to see what the next big thing is, which will be the reports coming out next week.
Look forward to talking about that. But before we get to it, I want to talk about outside market influences too. What kind of outside market influence did we see for the grain markets this week?
We've been recession or the concerns about what's going on in the economy has certainly been looming large in this market, and with the inflation, with the high costs of energies, we've started to see a little bit of unwinding of that. Finally seeing the energies come down a little bit. But we're not quite seeing it grab the grains as much as we'd like to. I do think that the stock market being stronger this week pulled some money out of the commodity market, and some guys going back to the stock market and investing there again. So I do think it has an influence. It's going to be even bigger as we go forward if we don't get a handle of this inflation.
As you mentioned, next Thursday, June 30th, the USDA is going to be releasing the quarterly stocks and planted acreage report. Traditionally, that's a really big report for the grain markets. What are your expectations, Randy?
I'm expecting that I'm kind of the contrarian of most right now. I'm thinking we're going to see lower wheat acres, especially the spring wheat side of things, because it was just too wet to get the crop planted up here in the north. Same with corn. I think we're going to see lower corn acres. Everybody I talked to said they came in with lower corn acres than what they were hoping to plant this year. Bean acres, I think we'll see a little bit of an increase. Sunflower acres, I think will increase some of the later season crops. So I'm thinking it's going to be a little bit friendly towards the wheat and the corn, and a little negative towards the oil seeds, which, right now we've been seeing those oil seeds get beat up pretty bad because of the increase in palm oil, and with the exports, Indonesia exporting again, that's really beating up the vegetable oil market.
What about the specialty crops? I mean, you mentioned sunflowers, but there, of course, are other specialty crops that we can grow up here in the north too.
I think barley acres are going to take a little bit of a hit. Again, it was wet during the prime planting season for barley. Durum acres, I think, are going to be a little lower because we just ran out of time in getting the durum planted. Dry edible beans, I think, will also see a little bit of a decrease, mainly because of how wet it was. Dry beans don't like wet feet, and so I think there's going to be less acres there. And I think that more soybean sunflowers are going to grab it, and they were later season, which you could plant a little bit longer.
So I don't know about you, but one of the big questions I keep getting from folks that aren't necessarily up here in the northern plains, they want to know prevent plant. How much is there in the north? How soon do you think we could get a clearer picture of that?
Oh, January? No. I think we might get it a little sooner than that. I think, we'll get a hint of what it could be here in this June report. Probably August, September, we'll get a little bit more formal number for it. I'm looking at it being somewhere between that 1.5 to 2.5 million acres. So I'm thinking we could see about 25% of North Dakota, northern Minnesota, northern South Dakota seeing prevent plant.
Well, there was such incentive. Good commodity prices means that farmers really wanted to plant a crop. I think a lot of them certainly tried to do that if they could.
Oh, most definitely. When we first went into this, we were thinking prevent plant could be closer to 40%. But then once we got towards the end of the wheat and the corn planting season, we got warmer, drier. Weather started to actually improve. That's why I think we're going to see more soybeans and sunflowers, and a little less corn and wheat.
We know that's a really big report there. What about the stocks numbers? Are there any big expectations for that when it comes out next Thursday too?
What's going to be interesting about the stocks numbers, right now we've been seeing a lot of bull spreading in the soybeans and in the corn, which means, everybody's buying the front month and they're not buying the deferred contracts. That tells us that there's a supply issue. Basis levels are strong. That also tells us there's a supply issue. So it's going to be interesting to see if USD comes in and tells us that, we've got tight supplies because right now the cash market's kind of telling us that. So that I think is going to be the big thing to watch, is mainly for what they do with the corn and the soybean in stocks estimates.
And again, that comes out at what time next Thursday?
11 o'clock next Thursday.
In addition to this big USDA report coming out next week, what else are you watching for in the grain markets as we head into this final week of June, Randy?
Well, weather is going to, of course, always be the big part, and that right now is dictating kind of what's going on. They did pull a little rain out of the forecast for the 6 to 10 day forecast I saw for Illinois. Illinois did see a 30% increase in their drought area in the drought monitor map. That's going to be something to keep an eye on going forward. They're continuing to be warm and dry through the end of June. And now, with some rain being pulled out for that 6 to 10 day forecast, this could drift into and see some hotter, drier conditions for July as well. That will cause this market to see a little bit of push in it as well. Because so watching the crop progress report to see where the conditions are for the Corn Belt, primarily Illinois, that's going to, I think, help drive this market.
What do you think the report will say about the crops here in the Northern Plains?
I still think we're going to maintain. I don't think we went backwards this week. Thursday and Friday, extreme hot. We'll see what kind of volatile weather Friday brings us yet. We're still not done with it because at the time we're doing this recording, but some heavy storms are expected to come in. We'll see what brings. But I think our conditions will stay the same. It's going to be the Corn Belt that we pay attention to.
Shifting a little bit over to the livestock markets here, there is a new cattle on feed report that's out as of Friday afternoon. What did we learn from that report, Randy?
Well, it kind of told us somewhat what we were expecting, and that is that we have a lot of cattle in our feedlots, another record number. It came in as expected at 101% of a year ago. Placements came in a little bit less. That's a little friendly. We came in at 2% less at 98. Marketing was a little disappointing. It tells us that the feedlots aren't quite current. And that could be because of that hot conditions that set up that kind of prevented a lot of guys from moving cattle because of the heat. So marketing came in at 102% of a year ago, down 1%. Overall, I don't know if it'll be a big market mover. I don't think it's bearish, so it should bring some support. If we can keep the economy improving and we can improve domestic demand, I think the cattle markets could see some better movement here moving forward.
What other takeaways do you have from the livestock markets in general this trading week?
Well, the cattle on feed report out of the way, that's going to certainly help. The economy improving certainly has helped a little bit in the livestock sector. Domestic demand is still a little bit soft. That's something that we need to see pick up. But if we can get energy prices to continue to drift, I think that'll help the domestic demand as well. And we do have a hogs and pigs report coming out here next week as well. And right now, it's the first time in I think 3 years there's a hints that there could be an expansion in that report. So that's something to pay attention to next week.
Well, Randy, I really appreciate the chance to connect with you today for this market update. For daily markets and market analysis, be sure to tune into the Red River Farm Network on air and online at rrfn.com. I'm Carah Hart here for the Red River Farm Network. This is the Agweek Market Wrap brought to you by Gateway Building Systems.